Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to start off here with the ETF dashboard for the week ending Friday, May 23rd. And you can see we had a lot more damage going on this week than we did the prior week. The prior week, we had everything positive in the sectors down here. This week, almost completely opposite. Only one sector was positive and is essentially flat, the NASDAQ Biotech. Everything else was in the red. And when you look at the index ETFs, the Russell 2000 continues to be the weakest on for this last week and the weakest on the year. And everything is now back in the red on the year after the damage that just happened here this last week. When we look at the 16 sectors that I track on a regular basis, home construction, the home builders, wow, they are very negative. Down 6% and 13% on the year. Utilities right there at a +7. Pretty amazing, actually. They just continue to be strong. And right on their heels, industrials. You know, I need to take a look at those industrial stocks because they just seem to be hanging in there and getting a little stronger. And every week it seems like. Okay, so that's where we sit with that big picture. I'm not going to go into the rest of the ETF dashboard that I walk through every Saturday with my members, or Friday evening, actually. Let's start off here with the Dow Diamonds as we take a look at the index ETFs. So the Dow Diamonds were down 249 on Friday, third day in a row, closing below the 10-day moving average. This zone up here that I had identified has truly turned into resistance like I was thinking it would. It just couldn't get through it. And so far, it's been a pretty decent little barrier, and we'll see what kind of pullback we get. Now, of the major indices, this weekly picture over here is the weakest, down 1022, closing below. And I say the weakest because it's the only one of the majors that closed below the prior week low. And it was an outside type of candle in here, outside down, so pretty weak. We'll take a look at IWM on it. Let's just go there because IWM did the same thing. So sorry about that. I guess I was thinking of the Qs and the SPY that didn't do this, didn't close below the prior week low. But same kind of thing here on IWM. You know, we had a resistance point up in here, and it just it started to stick its nose above that and then just got repelled back down. Third day in a row, closing below the 10-day moving average. When I look at the Elliott Wave picture, here's what I've got. Okay, I've got this as an intermediate wave 1 down and intermediate wave 2 back. And the pullback, pretty strong snapback in here. And I think it's complete. I think we have begun the third intermediate wave down. And we got right back into this, what I call a reversal zone between 50 and 61.8%. Okay, so let's take a look at the daily. Here's the way I've got it. Now, I don't really like this A, B, C that much, honestly. This short little A, B like this, we got very oversold. We came up here and got overbought. Got a nice little divergence here near the top. And when you drill down and take a look at the intraday, it's a little bit clearer. Now, I still don't like this AB that much, but I'm staying with it because on this C wave, which extended, we got this 5-wave move on the C wave. Okay, and yes, I broke down and looked at the 5 waves within each between wave 3 and wave 5 in here. Beautiful divergence showing up here at the end. So in terms of the move, starting the move down, yeah, I do think we have 5 little waves for a first little impulsive wave down. So I wouldn't be surprised to see a little bit of corrective move in here, but we've started down, I believe. Okay, so that's the picture on IWM. Let me go back to the moving average view and let's take a look at the SPY. Okay, here's the SPY. So it was down 398 on Friday. This is actually the third day in a row below the 10-day moving average also. Down 1509 on the week. Again, so the SPY and the Qs didn't close below the prior week low, but it still looks like we're incurring some damage. And I think the big thing on the SPY and the Qs is we got gaps to fill. Okay, we haven't filled this gap in here on the SPY, and we definitely haven't filled the gap down in here that was created on April 23rd. Now, it may take a while. I mean, you know, these downside gaps got filled fairly quickly. I think it was like 20, 22 days, something like that. So, and sometimes the upside gap takes a little longer. And, you know, it doesn't matter where you look. I mean, look at the big gap that was created here on the election with the election results. Yeah, it got filled, but it didn't get filled till January 13th. So we'll see how long does it take to fill these gaps in here. And, you know, that's what I'm looking for, because I think we have sideways corrective action going on. That's what I've been talking about every time. I'm not going to talk about the Elliott Wave picture on the SPY and the Qs today. I rotate through those. So next week I'll be back. I'll take a look at the Dow the week after the SPY. And so that's what I'm expecting, though. And we'll see what how long that takes for the corrective waves to play out. But the bottom line is, I think we're still in a bull market that's got much more to go to the upside. And let's take a look at the Qs. All right, here's the Qs. Down 476. So little bit playing a little bit of lag to the SPY, right? We only have 1 day below the 10-day moving average. We haven't even come close to closing this gap that was created on May 12th. We still have that gap back down in here from April 23rd also. So yeah, there are gaps to close here on the Qs. All right. Let's see. I need to look at my notes to see what I was going to talk about next. Oh, I was going to show the VIX, because this is all of a sudden kicking in after that dramatic volatility collapse that happened. Okay, so now Wednesday, Thursday, Friday, closing above the 10-day moving average. The 10-day moving average is rising. It almost looks like we're getting a little bit of a repeat from the end of March into early April. We'll see what kind of fall through we get in here. You know, they did give a lot back on Friday, though. You know, you could see the candle, and we closed halfway down the candle in here. So we'll see what kind of follow through we get on Tuesday. Remember, the market's closed on Monday for Memorial Day weekend, which reminds me, I just wanted to say that, you know, it just gives me pause every time Memorial Day weekend, because I always think about my Uncle Bob, who retired from the Army, and then he served in the Pentagon and retired from the Pentagon. And he was a World War II vet, Silver Star winner, and awardee, I guess I should say. You don't win the Silver Star, you get awarded the Silver Star for bravery. And fought in North Africa and up Italy in World War II. And, you know, I was with him when he was dying of cancer at Walter Reed Hospital, and we buried him in the Arlington National Cemetery. And so there's a lot of people that need to be remembered on this type of weekend. I know it's a great weekend, the unofficial start of summer, I guess, and the Indianapolis 500 tomorrow. So it's a great weekend, but a lot to remember also on this weekend. Okay, let's talk about semiconductors. Okay, let me pull up this chart of the SMH ETF and the SOX index, the Philadelphia Semiconductor Index. Very, very similar, but I'm going to show you Nvidia in a minute, and Nvidia has earnings after the market closes on Wednesday. So it's going to be really, really interesting. I'm putting a notification on the chart here. Close the week of June 9th. Okay, of last year. That's when Nvidia split 10-for-1. And you can see the SMH wasn't very much higher after that, and it has been, for all intents and purposes, in a downtrend, right? Lower highs, lower lows. Now, we've had a heck of a bounce back in both SMH and the SOX. But we've got a lot of resistance that is sitting here from all of this congestion, and they're going to struggle to get through this, I think. Okay, so given this picture, let's take a look at Nvidia. And let me go back to the home page here, and let me scroll down and pull up Nvidia. So this is a daily chart, and so you can see, I've got the 233-day moving average in here. That's my Fibonacci version of the 200-day. The 55, clearly the longer-term trend looks like it's kind of broken down. It's become overbought. It's the most overbought that it's been in since last fall, actually. But I think the other thing that really caught my eye on this is this picture right here. This is a weekly chart of Nvidia. And look where the volume kicked up in this. The week of June 9th, Nvidia split, started trading on Monday, June 10th with the 10-for-1 split. It closed that week at 131.88. It closed Friday at 131.29. Okay, right here. It's moved down a little bit in the aftermarket. So 131.29. Literally, for all intents and purposes, flat on the for the entire time since then, almost a year, right? We're coming up on the anniversary of that split. So pretty interesting. And then you've got this potential head and shoulders pattern in here. So this week, I'm calling it the Nvidia test. If this breaks down and starts a breakdown here of the right shoulder and then breaks this down, it's going to really, I think, impact the semiconductors and what we just looked at with SMH and the stocks, and I think the market overall. And it could be a little bit of a trigger for a continuation of the corrective pattern that I'm looking for the next, I want to say, month or two. So we'll see what happens. Okay, that's it for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this information, head on over to joehenches.net. Everyone have a wonderful week and a great weekend.